please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Business Saturday in the Mumbai News Centre. I am Ritu Singh and here straight to the top story that we're tracking for you today. Now, fuel prices have been raised yet again for the 13th consecutive day, with petrol crossing the 80 rupee mark in New Delhi for the first time ever. Petrol is up by 39 paise per litre and diesel by about 44 paise. So petrol prices in Delhi have touched 80.38 rupees per litre and in Mumbai 87.77 rupees per litre. Diesel prices meanwhile soared to 72.51 rupees per litre in Delhi and to 76.98 rupees per litre in Mumbai. We spoke to Narendra Taneja, the national convener of BJP's energy cell earlier, and he said that the government is working on the fuel price issue 24/7. He added that the government had raised the subject with several chief ministers already.
A lot of people are facing inconvenience due to that, and we are very sensitive to that, and we understand the suffering of the people, especially the lower middle class and the middle class. We understand that, and we are with them on the issue. And government is working on this, believe me, 24/7, looking at the picture, looking at the crude prices, and also looking at what could possibly be done as soon as possible. When it comes to the price of crude, and we depend 85% on imports, it's a given. There's nothing the government can do about it. When it comes to the state governments, the VAT they charge, the sale tax they charge, that's also given. You know, there's nothing much we can do about it. So when it comes to the central government, basically we are referring, or we are talking about the excise duty. That's what we are talking about. We keep on raising this issue with different chief ministers. Why don't you bring down your taxes? We keep on doing that. But we can't issue a diktat under the constitution. That would be illegal, against the spirit of the constitution. The tax architecture, this has been in place for 60 years. We didn't create it. And the question is, when it comes to states, I mean, this is what we want. We are proposing an alternative, that this architecture needs to be reworked. That's only solution, only way forward is to rework the tax architecture, and this is what we are working on.
We also spoke to Sanjay Jha, the spokesperson of Congress, who hit out at the government and said that they should have had some kind of buffer to pass on the benefits to consumers. Listen in.
The situation that you have today, such that when international prices are firmed up, the government seems to be saying, you know what, I have no choice. The markets are, becoming more expensive. The import cost is higher. The rupee is depreciated. Therefore, the common man has to pay more. It's like Narendra Modi telling you and me and the viewers of your channel, heads I win, tails you lose. We are talking about a number of 11 lakh crores. That's the excise duty collections if you look at it over the last 4.5 years.
Yes.
Question that the people of India will ask, shouldn't you have created some kind of a buffer by which you would have been able to pass on the benefit when the prices firmed up? If you look at the numbers for this year, the numbers are that they have already crossed 86% of the fiscal deficit by August end. So the government today has no elbow room. So today they are telling you that we are helpless. We'll bring it under GST. Trust me, they are lied through the teeth. If they wanted to do it, they could have. If they want to do it today, they can. They have the majority in the GST Council, and they can do it.
Well, here's the latest on the Mint Street then in the currency market. The Indian rupee firmed up yet again, most likely propped up by the dollar selling by RBI through banks. So the currency ended 21 paise higher at the 71.73 mark to the dollar in yesterday's closing. Now here's some macro data then. Current account deficit in the first quarter of the financial year has risen only by 5%, and this is largely thanks to Indians living abroad whose remittances have seen a sharp 17% rise. So trade deficit widened by 9%, and RBI's reserves, that is forex reserves, have depleted by over $11 billion between April and June. Lata Venkatesh is here with us to analyze this CAD data. Lata, not a big worry on the deficit front just yet.
Well, I would first of all want to point out that the current account deficit is not a problem in the first quarter. It's come in at 15.8 billion compared to 15 billion year ago, same quarter, 2.4% of GDP. Not alarming. But look at the number, 15.8. Largely, it is a small number because you had a very good private transfers. That's the big positive. About 19 billion, 17% rise from year-ago levels, Indians living abroad and sending that money into India. The negative really is the trade deficit. The trade deficit is 29.9 billion compared to 26 billion year ago. Now, 29.9 billion is April, May, June. July alone, our trade deficit is 18.02. So watch, if it is 18 for every one of July, August and September, second quarter will be 54 billion compared to 29 billion in the previous quarter. That is what we have to worry about, not the trade deficit of the quarter gone by, but the trade deficit of the quarter that we are living through. We only have to hope that the rupee depreciation will increase exports and reduce imports, and we will not have a blowout 18 billion month after month. If we can restrict it to 1 or 2 months, we would be home. Coming to the current account deficit, coming to the capital flows, whatever the FDI gave us, 9.7 billion, was taken away by FPI for portfolio outflows. So net, we actually, our reserves reduced by 11.3 billion because the capital inflows were not enough to cover the current account deficit. Now we will have to see how we figure in the second quarter. Again, it's net outflows. FDI is coming in, but portfolio outflows are continuing. We will have to see a reversal of portfolio flows, either because the rupee is so cheap and India remains a growth story. Otherwise, we will continue to deplete our reserves. So those are the two red flags I want to point out. Trade deficit and this continual outflows on the portfolio account. If that were to continue, the reserves would start shrinking. We have enough reserves. We have $428 billion of reserves. But shrinking quarter after quarter is not a happy experience.
All right, Lata, thank you very much for joining in. Welcome back. You're watching Business Saturday, and here's a story we just broke for you some time back. Stressed private power producers have now moved the Allahabad High Court to oppose resolutions under NCLT. This comes a day after banks under Samadhan had taken a U-turn. My colleague Anshu Sharma, who broke that story yesterday actually, joins in now with more details. Anshu, so who are the power producers that have moved the court and what is expected?
So, Essar Power, GMR, Ratan India have moved Allahabad High Court against settlement under insolvency and bankruptcy code. They have sought extension of about 60 to 90 days as deadline of Reserve Bank of India's Feb 12 notification has ended on August 27th, and within 15 days, the lenders have to approach and file an application under IBC code. Now, remember, about 34 stress assets were identified by the government of India, out of which 7 are already resolved, but others will have to go through NCLT process. Other than that, as reported by Ritu, you yourself, SBI has withdrawn its Samadhan process for resolving some of these assets, about 7 to 11 assets. And over and above that, about 11,500 megawatt of stress assets are supposed to come under Parivartan, of which the framework is being worked upon by the government and REC. So we'll have to wait and watch out how lenders behave ultimately when these assets go to NCLT and how resolution will come up for these stress assets. Back to you.
All right, Anshu, stay with us. We also caught up with the Power Secretary, Ajay Bhalla, and he told us that they do not want these power assets to be sold at low prices under NCLT. Listen in.
And process of NCLT will go on. We only don't want the assets to go at very low prices. Some of these are commissioned assets, which are essential and very useful for the country. So we should address certain issues so these assets fetch better value. The Samadhan part, I think, is almost over if lenders have not been able to resolve it by 27th. So that part, I don't think there's anything left anymore. Okay. That's what we heard from, and as per the media reports yesterday, the lenders have agreed to put these assets into NCLT. That's the legal position also.
All right, Anshu, thank you for staying with us. We also understand that the Power Ministry has now proposed amendments to the Electricity Act 2003 and sought comments within the next 45 days. Give us more details on that.
That's right, Ritu. It's been long pending amendments to Electricity Act, and some of the key changes that are proposed under this Electricity Act of 2003 are separation of carriage and content. Basically means consumer will have more choices in terms of procuring or getting electricity supply from their power company. Apart from that, the proposal also has included higher penalty for power cuts on discoms, and even power theft penalties have gone up. And apart from this, there's a proposal to set up National Power Committee, which will look at integrated operations of power system at national as well as regional level. And this is basically to ascertain that all the power demand of that particular area is met through the year. Apart from that, very interestingly, monitoring authorities are also proposed under this amendment to review DISCOM's long-term and medium-term PPAs every 2 years, which will be crucial as PPAs generally don't come in as of now, and there are so much stress in the power sector alone. So a monitoring authority will ensure that long-term or medium-term PPAs are there in place for DISCOMs, and there's no problem with the consumers. So we'll have to wait and watch out as to when this will be cleared by the Parliament. Back to you.
Anshu, thank you very much for bringing us both of those important updates in the power sector. Now we'll stay with the insolvency corner. The National Company Law Appellate Tribunal has ruled that New Metal's second bid for Essar Steel is eligible. In fact, it has also given ArcelorMittal time till the 11th of September to clear dues of its delinquent subsidiaries, Uttam Galva Steels and KSS Petron. Now, to quickly take you through the story so far, in the first round of bids, both ArcelorMittal and New Metal were disqualified under Section 29A, and in the second round of bids, ArcelorMittal along with Nippon Steel, New Metal with JSW Steel and Vedanta Group placed bids. But on 19th April, NCLT had declared the second round invalid and asked banks to reconsider both the first round of bidders and give them time to cure their disqualification. Now, with yesterday's order, effectively the NCLAT seems to have taken the view that both the players were disqualified in the first round of bidding. In fact, it has also reversed NCLT's April 19 order, which declared the second round of bids invalid, which means that besides New Metal and Arcelor, Vedanta will also now have to be considered. We caught up with Rajneesh Kumar, the chairman of State Bank of India, and he said that SBI had withdrawn the process of sale of debt of Essar Steel. Take us through the logic, why have you now decided to withdraw, selling this account to ARCs when you could rather, if I could say, stand a better chance of getting a higher value out of this sale at this point of time?
No, our only the issue about for sale to ARC was that we were not sure that when the order of NCLAT will come, and that's why we would just wanted to have alternate options. But it was never the intent that we have to necessarily follow the ARC order. If we can complete the process very quickly, preferably before 30th September, and then the insolvency process remains the preferred option for the bank.
Okay, Mr. Kumar, thank you for joining us. But there is no guarantee, of course, that the NCLAT order will not be challenged. In fact, ArcelorMittal came with a statement saying that they will study the written order, and it's quite possible they'll go to the Supreme Court. So the chances of a decision by September 30 still look very bleak, isn't it?
Even though it looks bleak, but we are also waiting for the detailed written order. But whatever the lawyer briefing is on the oral order given by the Honorable Judge, is that it opens one is that the order is very significant from the perspective of the issued around eligibility under Section 29A.
Okay.
It's not all about Essar Steel. It is all about that a clear now court directions or thinking is emerging on who is eligible under 29A and who is not. And as lenders, we are very pleased that all the judgments which have come so far on the subject, they have been very balanced judgments and clears a lot of errors. And that is where what the creditors creditors' position is like that.
5 years too late and too little. That best describes the Delhi land pooling policy, which was cleared today by a board headed by Delhi Lieutenant Governor Anil Baijal. Now, the reduction of floor area ratio from 400 to 200 is likely to have far-reaching consequences to the dream vision of a world-class NCR region. Manisha Natarajan joins us now to give us the highlights and why critics are worried about this policy. Manisha.
Yeah, right. As you said, the big point is that the FAR has been reduced from 400 to 200. DDA said that Delhi just did not have adequate water. 400 FAR means that you would have to build much bigger high-rises. The density would have been higher. But Ritu, this has sent, the entire calculations of investors into a tizzy, because the first time when the policy was notified in 2013, there are a lot of investors who got into the market, started pooling land from farmers on let's say, a sort of an unorganized manner, but there was some understanding between farmers and the early developers that the FAR will be 400. There have been apartments also which have been sold in housing group societies which have been formed. DDA has come out with advertisements saying these are illegal, but it's not strong enough. Those are now going to get into litigation. So the entire calculations of how much affordable housing stock will be created, at what level can investors actually make money, those have gone out of the window for now. But of course, we are now waiting for the approval from the Urban Development Ministry to see whether they will finally put a stamp of approval on the 200.
All right. I think we've lost that line. We'll try to reconnect with Banisha later again during the show. But here's a quick look at the global markets then. On the Wall Street, equity markets ended lower as the global trade tensions escalated. US President Donald Trump threatened tariffs totaling $267 billion against China. And this is in addition to the $200 billion that is already being considered. He also confirmed that US-Japan trade talks were up and running again. Now, in terms of economic data, ADP National Employment Report showed that US added 163,000 private sector jobs in the month of August. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
For CNBC TV18, I'm Josh Lipton. U.S. markets finishing on a down note. The Dow off 79 points, the S&P lower by 6, and the Nasdaq down 20. President Trump threatening to levy tariffs on an additional $267 billion worth of Chinese goods. The threat coming after a deadline for comments regarding tariffs on another $200 billion in Chinese goods passed last night. China, for its part, reiterating that it is ready to retaliate against any new U.S. actions. Meanwhile, the U.S. adding 201,000 jobs in August, 10,000 more than expected. Average hourly earnings also jumping, with wage growth reaching a post-recession high. The unemployment rate, meanwhile, holding near 3.9%. And Tesla shares getting slammed today following the departure of another executive and a bizarre appearance by CEO Elon Musk on the Joe Rogan Experience podcast. That interview getting a lot of attention after Musk appeared to smoke marijuana on camera. Chief Accounting Officer Dave Morton also resigning from his post, even though he only joined the automaker a month ago. Shares finishing the day more than 6% lower. That's the action from the U.S. market. Now back to you in Mumbai.
All right, Josh, thank you very much for bringing us that report. Now back home here at the Mobility Summit in New Delhi, Parikshit Luthra spoke with C.V. Raman, the Senior Executive Director, Engineering of Maruti Suzuki. Now the company showcased a prototype of an electric vehicle. Let's listen in more about the future plans for this particular prototype.
Basically, this is a prototype vehicle which we have built, and we will be judging what kind of issues are going to come when we are, in high temperatures, low temperatures, in stop-go traffic, and so on and so forth.
So far, sir, your own survey, what has your own survey revealed as far as the market for electric vehicles is concerned?
I think very clearly, the customer, we have to understand that better. That study is also happening in parallel. We are going to use this vehicle for defining various use cases of usage and run these vehicles as per those use cases, just to understand that how it would perform in a fleet condition, how it would perform for an individual customer, and so on and so forth.
So the basic platform, sir, is that of a Wagoner over here?
What we have showcased here is the prototype is built on the Japanese Wagoner, but this is just a prototype.
This is just the final car may look something completely different.
Well, that will be totally different.
Did you see any roadmap as far as the rollout of electric vehicles is concerned for the auto sector for the next 10 years?
I think very clearly the Prime Minister has spelled out that energy security and environment sustainability is key going forward for India, and we need to find solutions which are important for that. Okay. And so therefore I think we all need to work together.
And the focus of Maruti Suzuki will also be to reach out to cab aggregators. Do you think public transport will be the big focus of electric vehicles? Those will be the larger consumers?
Very clearly, as you know, the CEO of Niti Aayog has also spelled out that two-wheeler, three-wheeler, the fleet segment, the bus transport sector is where there would be a possibility to shift immediately to electric vehicles. So I think definitely there will be a use case for fleet aggregators.
All right, here's some news from the political space then. Ahead of the all-important 2019 general elections, the Bharatiya Janata Party is holding a two-day national executive meeting. We have CNN News 18's Maria Shakil with us to tell us what is on the agenda. Maria.
Yes, as far as this national executive is concerned, it's certainly the last national executive before the crucial semi-finals of sort, which is being seen when three states, that is of Chhattisgarh, Madhya Pradesh and Rajasthan, these are three incumbent states of the BJP, in which, in fact, in Chhattisgarh and Madhya Pradesh, BJP has been in power for close to 13 to 14 years. They go to polls towards the year end, and hence the BJP is certainly looking at as to how to do a certain kind of balancing act or tightrope walk, should I say, on the reservation issue. Because in Madhya Pradesh in particular, there has been a lot of protests that have taken place by SAPAK, which are essentially upper caste groups who have been saying that any reservation that is being given to the SC/ST should be stopped immediately, or perhaps this has been done particularly in the context of reservation in promotion in the state of Madhya Pradesh. Whether these protests will be spreading to other states or not, that remains to be seen, but certainly BJP understands that this is a crucial constituency they do not want to antagonize, but at the same time, they do not want to be seen as anti-Dalit. So that kind of tightrope walk is something that will be discussed. But of course, on the agenda is the various issues in poll-bound states and the celebration of various schemes of the Narendra Modi government, be it the Ujjwala scheme or the Jan Dhan Yojana.
All right, Maria, thank you very much for bringing us what to expect from this meeting. But with that, we're completely timed out on the show. Thank you very much for watching. But do stay tuned to CNBC TV18 for all your news and updates.